I'm David Bank, and from Impact Alpha, this is an Agents of Impact podcast.
I think it's incumbent upon us, people who are change makers for a living, to figure out solutions to access and create solutions for these quietly bothered folks that meet them where they are in lives. We Uplifting Capital call them micro acts of courage. We want to turn these desires and these kind of big sweeping changes into micro acts of courage that people can access in a day.
That's Toussaint Bailey, founder and CEO of Uplifting Capital in San Rafael, California. Uplifting Capital is opening up private market impact opportunities to a broader cast of investors. Let's jump right in to our conversation.
Hi, Toussaint.
Really good to meet you, David.
Likewise. Just tell us your story on the Uplifting Capital tale.
Yeah, so story starts really in 2020. And so I was running a decent sized wealth management firm, $1 billion plus wealth management firm at that time, and was deeply affected by the killing of George Floyd, like a lot of people, by the subsequent uprisings. Took a sabbatical from my role as CEO of that firm and led a series of conversations around race and racism throughout wealth management and at a few fintech companies. And I had this experience of sort of unlocking fulfillment, actually, in a deeper level of personal meaning by engaging with the impact I wanted to have on the world. I saw that effect with the people who I was having conversations with. And at that point knew I needed to do something more than just help people create wealth. I needed to help people who seemed to be genuinely bothered by what they were seeing, seemed to genuinely want to make change. This includes advisors who I was working with, clients who I was working with, help them engage with that impact in a way that made sense. And really, we call them micro acts of courage, like turn these big sort of macro problems into something that they could access through micro acts of courage. And so at that point, I started down the road of, I'm here in the Bay Area and sitting next to a lot of people who are in social venture. There's a lot going on in renewable energy, affordable housing, but those aren't asset classes or corners of investing that traditional wealth management or even smaller foundations are typically aware of. And so figuring out what that vehicle was to translate these really actually attractive from a financial standpoint, impactful from an impact standpoint, investment opportunities, to translate those to something that made sense at a much more rapid pace now than they have over the past. Have been more interested in sustainable investment, but this intersection of sustainable or impactful private investments hasn't really been scaled to this newer class of retail investors, maybe too broad of a term, but this new class of investors. And so we built Uplifting Capital as an investment experience to really give access to impact investments in the private markets, to personalize those investments in ways that made sense for investors or make sense for investors, and to really create the financial experience within a portfolio that makes sense for this different set of investors.
And so the different set is not necessarily big institutions. What kind of investors?
That's right. So mindful institutions. So a lot of the work that's been done by VC Include and Include Ventures, where I'm a member of the second cohort, has been the tip of the spear work. So investors who have typically been in private markets include like these large pensions, endowments that have been allocating this way for a long time. Some of those investors have come to this awareness that investing for more inclusion and investing for more impact does not necessarily have to be concessionary. So they started to shift their portfolios that way. As new investors are starting to invest in the private markets, that's high net worth individuals, multifamily offices, smaller foundations that are realizing the opportunity in the private markets. There's a big shift in who makes up the demographics of private market investors. We would see kind of more of the same non-inclusive, non-impactful kind of traditional investments in the private markets as we've seen in the past, if we're not mindful about creating tools for these new sets of investors to access inclusive and impactful investments. So those new sets of investors are these high net worth individuals down to some retail individuals that we want to get to at some point. That is foundations that are realizing the opportunity to amplify their missions through mission aligned investing that haven't necessarily been there before. And it's those kind of broader swath of investors.
And so where are you at now in the Uplifting Capital progression?
Yeah, so the plan is to change the world. And so, but you have to start somewhere. And so we're raising our private equity fund in annual vintages. And so this year we're raising a $25 million fund. And with that fund, we built in these investment attributes and other attributes that both institutionalize the fund, but also kind of make that fund such that it's easy to access. So we have things like no capital calls and no J curves in our fund. We have a configurable fund. And so we have 9 impact themes: people, planet, economy. And within those, we have 9 sub themes, but people can overweight to one theme or another depending on what their impact interest is. So we built out all of that. We built the fund at an institutional level with the best fund admins, best accountants and lawyers that you can think of. And we're going to grow this first fund at 25. The next fund will be at 100, and we plan to settle in in years going forward between 200 and 300 million
each year.
A year. We'll go out every year, and that's what we'll raise. If you look at what's being raised in the private wealth space, and particularly by huge asset managers who have woken up to this opportunity, that is a drop in the bucket. And I would posit that I think people want to be invested this way. They want to be invested for impact. In the private wealth space or these smaller foundations, they want to be invested more inclusively. All they need is the tool. And so we've built that tool. We're going to raise this first fund. We plan to raise that 25 million from 3 to 5 institutions who will be design partners with us, who are true believers. And so we have a couple of those institutions who are soft committed already to being a portion of that investor club. That's going to be those design partners. And so they'll also anchor our next 2 funds, that same first group.
Just drill down a little bit for me, and maybe state it again, the new mechanism or the new structure that unlocks some of this wealth that may be sitting on the sidelines.
Absolutely. Yeah. So it's a diversified fund. So diversified across asset classes. And so a lot of the talk in private wealth or among wealth managers or among people who are leading investments for smaller foundations is about the shift from the 60-40 to alternatives. And alternatives is talked about as this monolith, like, we're going into alternatives. But really what that alternative sleeve needs to be is something that complements what was there before or is the right replacement for what's there before. So the first thing we've built is a portfolio sleeve that looks different from a single fund that, you typically think of someone with $1 million to invest. Maybe that gets them into one of these kind of highly sought after funds. We've diversified across venture, private equity, later stage private equity like buyouts, real assets, and real estate. We've allocated that fund like you would for a family office investor who could target each of these asset classes separately. So one piece of it is that diversification across asset classes, and that also gives us diversification across impact themes. The other piece of it is the ability to configure that fund. And so we built within the fund a mechanism for someone who says, I believe in impact, but I'm particularly interested in sustainable food and agriculture. We can overweight that initial fund to focus specifically on that sustainable food and agriculture. And so that configuration of the fund, we've also balanced the fund between direct and fund investments. And so it's 50% funds and 50% directs. And we have our fees set so that the fee experience is not what people typically have an aversion to when you talk about fund to funds. And so we talk about multiple managers with a single manager experience. We're targeting a 2 and 20 fee load for the total fund. And so all of these things are attributes that help people access the investment. And then when you talk about what that investment experience is, we're targeting private equity returns, but looking to send people back cash early on in the fund life cycle. So a lot of the investors who we're dealing with aren't used to these 5, 10 year holds.
Lockups.
Not only lockups, but like liquidity weights. Yeah. Right. And so using things like affordable housing, renewable energy infrastructure, later stage private equity to have money show up
things
faster.
That have cash flows.
Things that have cash flows and have returns a lot quicker is just going to be more conducive to how many of the investors who are new to private markets in general, not just impact, are used to seeing investments.
You talked about, you had a phrase, the quietly bothered. The quietly bothered.
Yeah.
Tell us about who the quietly bothered are.
Yeah. So I spend most of my time in rooms where I'm preaching to the choir around impact investing and the fact that impact investing is not concessionary, and the fact that we need inclusion and we need impact in the public market in for-profit ways to drive forward impact. But there's this group that's one ripple out from the believers and this tip of the spear that I've learned about in kind of making my way into impact sitting in a private wealth firm, which is this group of quietly bothered people who want to do something. So it's not the people who have their heels dug in and who are actively resisting or denying climate change, or actively pushing to get conversations about race out of schools. These people are actually bothered by what they're seeing. They don't have an access point to create change that meets them where they are in their lives. And so I think it's incumbent upon us, people who are change makers for a living, to figure out solutions to access and create solutions for these quietly bothered folks that meet them where they are in lives. We Uplifting Capital call them micro acts of courage. We want to turn these desires and these kind of big sweeping changes into micro acts of courage that people can access in a day. So how can I turn, if somebody is a high net worth individual who truly has a heart for change, but hasn't shifted their portfolio from traditional investments into something that is for impact, or into a more inclusive manager? How can we make that easy? I think it would be easy to sit and bump our heads against a wall and talk about how they need to change, or how they aren't doing enough, pointing outside of ourselves. But if we're not creating solutions for the people who even want to see change, then we're missing the opportunity and the imperative. Like, climate change is an all hands problem. Like, reproductive rights are an all hands problem. Racial equity is an all hands problem. So if we're missing potential allies, then shame on us. So
broaden the circle, bring the capital in, get it to the right folks, make it easy.
That's right. At least for the folks who want to see change, right? So I think there's this misperception that anyone who hasn't done anything yet is either too lazy or entrenched in some point of view that's against folks who want to see change on all these different fronts. And there's a group that's one step inside of that. And so for those folks, yes, create the mechanisms.
And just specifically, where are you at now in fundraising, in making deals?
Absolutely. So we launched the first our fund one mid-year this year. We'll be raising that hopefully through the end of this year. So we want to close that by the end of this year, at least in terms of commitments. And so we're talking to large RIA firms. And so we have one large RIA who will be committed to being one of those founding five. We're raising that $5 million fund in checks of at least $5 million each.
So $25 million fund in chunks of five.
In chunks of five. And so what we're going to do is, one of the people who came in to talk to our cohort for VC Include is Sue Twigo, and she talked about the power of investor circles. And so a lot of the folks that you'll see, actually Impact Alpha did an article about are touching on this phenomenon, where you have a fund that a new GP is raising, and you have an allocator who believes in the strategy, who believes in the manager, but says, I need to invest at least $5 million, and it doesn't make sense for my due diligence process if I can't do that, but I can't be more than 20% of the fund. And so you have all these folks who are willing to write checks, but no one willing to write that first check. And so investor circles, where you bring all this money in at the same time, and you have a few courageous allocators write those checks and move forward together, is one way to solve that problem. I think the way that approach has been deployed up to this point has been with pensions and endowments. But my relationships are in the RIA space with both large wealth management firms and asset managers. And so for me, taking that same strategy and having that same conversation with these large RIAs is where I found success. And so we are we've started to deploy some money. We have an anchor investor who's invested enough for us to write a first few checks. We'll raise the rest of it in that way. And so pretty far along in two of those conversations. But if there are three other firms out there, would love to talk to them. We're active in several of those conversations. And so I feel good about the fact that we're going to get there, but we're going to have to close those conversations before mid-year next year.
Not to put you on the spot, but it did come up on stage there that you tried to be in the first cohort last year and now and weren't accepted, and now you're making it into the second cohort of the Include Ventures. So you're dogged.
Absolutely. Yeah, no, I wish I could say I didn't flinch. I was devastated not making it into the first cohort, because I knew not only the value of this program for me, but I believe in what VC Include and the whole Include franchise are doing, like creating the biggest sort of hurdle that we meet, at least a stated hurdle as emerging managers of color, is this perception that we're not institutional, perception that what we're doing is not of institutional quality. So for Bahia and the rest of the team to meet that challenge directly, and so we're going to give you the tools so that you're building something institutional, And we're also going to give you the confidence by bringing in the best of the best providers across every area that a fund would need to build, that you have something institutional. So a lot of us have actually built institutional firms and funds and don't know it for sure because you're meeting objection that seems to suggest that you're not institutional. So we have not only the infrastructure, we have the confidence, and now we have the community of managers along with us. And so I knew this was right for me, and there was no way that a single no was gonna stop me from what I was doing.
Terrific. Well, thank you so much, and good luck to you.
Thank you so much for your time.
That's going to do it for this Agents of Impact podcast. Check out my conversations with VC Include's Bahia Yasmin Robinson and other members of this year's cohort, and read more at impactalpha.com. Big thanks to Toussaint, to our producer Isaac Silk, and to the whole team at Impact Alpha, investment news for a sustainable edge. And to all of you Agents of Impact, as always, thank you for all that you do.